Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. Alicia, I wonder if you have any other thoughts on what to expect from the Republican debate tonight. And one thing that I should note is that we're going to have an extra candidate than we expected when we discussed this last week. That is Doug Burgum, who snuck in under the deadline on the polling threshold required to qualify. So the candidates who are going to be on stage are Florida Governor Ron DeSantis, Vivek Ramaswamy, Mike Pence, Tim Scott, Ambassador Nikki Haley, New Jersey Governor Chris Christie, and North Dakota Governor Doug Burgum. So it will be the same lineup essentially as the first GOP debate, minus one candidate, that is Arkansas Governor Asa Hutchinson, who did not make the cut.
So I think the dynamics are going to be somewhat similar to the last time, but though I think there may be a little more attention on Nikki Haley because she definitely got a bump in the polls. And I think there was a lot of praise for her performance. So there may be a little more criticism from her rivals. Ramaswamy, I think he will probably tone down his attacks on his competitors. I think he drew a lot of flack for perhaps being a little too bombastic in the last debate. So I think he may try to lay a little lower and not impugn the motives of his other Republicans. If you recall his line about Nikki Haley being on the boards of Boeing and essentially being a shill for the defense companies. So he may dial that back a little bit. But otherwise, I expect the dynamics to be largely similar to the last debate.
One thing, Monet, that I'm curious if it comes up is President Trump's recent tear on his social media site, Truth Social. I think this has not gotten a lot of attention, but it is where you can get Trump in the raw. And recently he said that the outgoing chairman of the Joint Chiefs of Staff, General Mark Milley, here's the quote, was actually dealing with China to give them a heads up on the thinking of the President of the United States. This is an act so egregious that in times gone by, the punishment would have been death, in all caps. He also said that Comcast and NBC News should be investigated for country-threatening treason. And he's retweeting stuff or retruthing it, as they put it over there, about how the Capitol riot was a Fedsurrection with Antifa dressed up as Trump supporters and coordinated by the deep state. And Monet, I wonder whether this is going to come up. It's made the news a little bit, especially with that comment on Mark Milley. But have Republican voters forgotten about the Trump fatigue that they had when President Trump left office?
To be honest, I think a lot of voters have forgotten about it. I do think that for most Republican primary voters, they ended up approving of the Trump presidency while he was in office because of the policies that he pursued, foreign intervention in the Middle East against ISIS, and the tax cut program, which helped expand the economic expansion and keep the economy growing and led to low unemployment. All of these things are why people ended up having a fond impression of President Trump and why a lot of people are open to supporting him again. But I do think that a lot of people have forgotten the daily barrage of Trump tweets and, which one of his staff members was he attacking today. And generally, it's the fact that he has been off of Twitter and somewhat out of the limelight, I think, has led to some people not understanding what a tiring process that could be and how it actually really did weaken the Republican Party. Candidates for other offices were constantly being forced to take a stance on what Trump had said most recently. And it does seem as if since his internet following has shrunk, he's actually become much bolder. And probably the indictments that he's under lead to an intensification of his ill will towards the media and towards his critics. And so he is really spouting off and saying really reprehensible things that I think a lot of voters would not like if they paid close attention to them. So I can't say whether it will be brought up during the debate. As you said, much of the press has ignored it so far. But I do think that it would be helpful to remind voters of exactly what Trump's disposition is with these sorts of things, his willingness to say reprehensible things that would be entirely unbecoming of the President of the United States. And believe it or not, the problem seems to actually have gotten worse since his first term.
Let's turn to the regulatory machinations of the administrative state, the Biden administration, particularly a new proposal by the Consumer Financial Protection Bureau, a rulemaking to remove medical debt from credit reports. And Alicia, can you give us a sense of what this would do and what the arguments that the administration is making is?
What this proposed rule would do is remove any unpaid or even or paid medical debt from consumer credit reports and would, on average, raise credit scores by about 25 points, which isn't nothing, by the way. So the credit bureaus actually last year announced that they were already making a lot of changes to reduce the penalties for carrying medical debt. They were removing any medical debts that were less than $500, as well as those that consumers end up later paying. But apparently, this wasn't enough for the CFPB, which is now kind of sweeping in and saying, well, we want all medical debt removed across the board. Now, the CFPB provides a lot of sympathetic stories about people who get sick and then get billed, or the surprise medical bills that, by the way, Congress passed legislation a few years ago to help avert. But the CFPB basically says that people get sick, shouldn't be punished for getting sick, and that could harm their credit scores, make it harder to borrow, to buy cars and buy houses. And so therefore, they're just basically removing the penalty for getting sick, which is really a misleading argument, in part because, again, if you have less than $500 if you don't pay, which is around the size of a lot of deductibles nowadays, you don't get penalized at all, right? So actually, over the weekend, I got a bill from Quest Diagnostics for about $10. I'm like, why should I even pay this? Because it won't harm my credit scores. I mean, there are already perverse incentives right now not to pay, small claims. But this would make it even more perverse. Why should you even buy health insurance? You're paying a couple $100, $200, $300 a month, and even more potentially for a family plan. If you rack up an emergency bill, it doesn't matter. If you don't pay it, it's not going to harm your credit. And what that, of course, will end up doing, by the way, if young people, especially young, healthy people, don't buy insurance, and the administration has been trying to push people and use different kind of incentives to increase the insurance rate, by the way, to reduce the odds of these kind of high-risk pools and adverse risk selection, to use industry's jargon. What will end up happening is that insurance prices overall will increase. Now, again, the idea that people can't afford these medical bills, well, the Obamacare already capped out-of-pocket insurance costs at around $9,000, $100 for individuals. And yeah, that's a lot. But if you want a more generous plan, right, you can actually choose one with higher premiums. And the Inflation Reduction Act really sweetened the premiums and capping them as a share of your income, which made them much more affordable. So there really isn't a reason why people shouldn't be able to pay, at least, eventually, these medical claims. I have a lot of sympathy for anyone who gets sick, obviously. But if you've got $5,000 or $6,000 in medical bills that you're not paying, that doesn't mean that you should be able to just buy a car and pay essentially the same interest rate as somebody who doesn't have that debt, who did pay off their medical debt. And that's essentially what the Consumer Financial Protection Bureau rule would do. It prevent lenders from even considering all this unpaid debt when they underwrite credit. So somebody who actually isn't paying off their medical debt would be treated the same as somebody who is. And again, this creates all kinds of perverse incentives.
Monet, this strikes me as a classic in attacking a problem at the place where it's perceived, not at the place where it begins. And I would draw an analogy to the student loan forgiveness offered by President Biden. Instead of asking, why do we have some people with large student loan balances? Are they mostly lawyers and doctors who are going to have the ability to pay them off? Is there something that we're doing that is pushing up the tuition prices at these institutions? Is there a way that we can provide more Pell Grants or more direct aid to people who actually need it to get through college? Should the student loan interest rates be tied to which major you choose? Instead of doing any of that, they just see the problem of large student loan balances, and the solution is to wipe it away. And I think this is exactly the same kind of thinking. Instead of dealing with any of these problems of medical debt, you're just going to blind the credit reporting system to it. And by the way, make underwriting worse as a result of it. I think the focus on incentives is exactly right here. This messes up all of the incentives throughout the system. As Alicia says, if you have a bunch of unpaid medical debt, I agree with her. I feel for you. However, that doesn't mean that you should be able to take out more debt at the same terms as someone who doesn't have that, but now is going to have the same credit score. And by the way, what about those doctors or those health insurance providers who now have no incentive to get their bills paid? Are they going to keep seeing patients in the same way? It seems like there's not a lot of thinking gone into the way that this percolates down through the economic system.
Right. I think that the analogy that you drew to the student loan scenario is a really apt one, and it does fail to address the root cause of the problem when you have federal agencies coming in and basically waving away existing debt as opposed to looking at the sources of the buildup of that debt among so many consumers. But I think there are also clear reasons why government often prefers to take that approach of dealing with the consequences, dealing with the symptoms rather than the underlying problem. One is that it can often be politically much more popular to do it that way. I think that things like healthcare or things like the finances of higher education can be very complicated and very arcane, difficult for voters to really understand how different policies that were targeted at reforming them would actually really function and how they would affect their lives. But you know that you're going to make a splash when the president comes out and says, we're just going to waive away your existing student debt. That's something that's going to theoretically get voters to the polls, particularly young voters who are burdened with quite a lot of student debt and think about erasing it as being one of their political priorities. I think that there's the same kind of effect with the CFPB. They want to have consumers know that they're not going to be penalized for non-payment of their medical bills, whereas taking a longer-term action to do some kind of structural reform of how this debt is being issued and what the causes of the run-up in prices for so many treatments and drugs are, that's something that's going to evade the broad popular focus and generally be the province of a lot of policy wonks, not necessarily breaking through into the mainstream. And so politics and the incentive to make a big splash that's going to get voters to support your policies can sometimes work in contradiction with actually taking the best, most rigorous approach to actually solving the problem.
Meantime, the Consumer Financial Protection Bureau is shortly going to go before the Supreme Court in an argument over whether its funding structure is unconstitutional. And Alicia, correct me if I'm wrong, but my understanding was that the lower court vacated a rule that the CFPB had done on that basis. Here's a summary from the Congressional Research Service. The Fifth Circuit vacated the payday lending rule because, quote, the funding employed by the Bureau to promulgate the rule was wholly drawn through the agency's unconstitutional funding scheme. And it goes on to say that decision only expressly affects the payday lending rule, but its legal reasoning could reverberate well beyond that one regulation and call into question the legality of every CFPB action funded by the Bureau fund. And so, Alicia, we'll give you the last word, but the other thing that I think is striking about this is shortly before the CFP is going to go to the Supreme Court on arguments about whether it can even constitutionally impose these kinds of rules, it is still pushing that envelope.
Right. And so there were a number of amicus briefs submitted in this case, raising alarms that you're going to basically disrupt the entire financial system, the housing market, because if you grant the plaintiff's arguments, in this case, the payday lenders, then the result could be vacating all the rules that are on the CFP books. I don't think that the court's going to go that far. Again, I think the Fifth Circuit's ruling was pretty narrow in this case. So I think that the CFPB will probably continue to exist. And just back up a little bit, the challenge is actually, or it's to the CFPB's funding mechanism, which it receives money automatically from the Fed. So basically the CFP director, Rohit Chopra, goes to the Fed and says, I want $200 million for the agency. The Fed will basically has to give it to him rather than going through Congress, where Congress has the power of the purse and appropriations powers, and this imposes some check on agencies. And that's the heart of the constitutional challenges here is you're basically undercutting the separation of powers and Congress's power of the purse here. Again, I think the CPB is probably going to lose here, but I think the decision will be narrow, especially the Chief Justice's, his tendency to try to limit the political fallout of the decisions.
Thank you, Alicia and Monet. Thank you all for listening. You can email us at pwpodcast@wsj.com. If you like the show, please hit that subscribe button, and we'll be back tomorrow with another edition of Potomac Watch.